Top gold price drivers. Gold miners are unable to boost gold output. Despite the increasing demand of gold miners can't simply ramp up their production to meet this need. This might seem counterintuitive given the market forces of supply and demand. However, it's not as simple as flipping a switch. Gold mining is a complex process requiring significant capital investment, sophisticated equipment, and a skilled workforce. In this industry, the locations where gold can be mined are finite. Geological challenges and environmental concerns also limit where and how much gold can be extracted. Securing the new permits and approvals for new mining projects is a time-consuming and often unpredictable process. The 2008 credit crunch severely impacted gold producers' ability to secure financing for new projects. This financial instability hindered the ability to increase production to meet growing demand. Even as the global economy recovered, the effects linger, causing a lag in the gold mining industry's capacity to expand. Also, the resulting inflation from the COVID-19 monetary easing created ripple effects of rising costs within this energy-intensive mining sector. The ironic twist of increasing inflation benefiting the price of gold creates a simultaneous effect of stifling its discovery. These various economic ripple effects have resulted in a greater scarcity of supply while the demand is only increasing. The result? Gold's increasing price. To add even greater challenges to the mining sector, due to the fact that humanity has been mining gold to various degrees over 5,000 years, all the easy deposits, in essence, are already mined. Even if greater technological innovation can keep up, discovery of this metal will remain a challenge. Hence, the possibility of the quantity of gold becoming inflated is not likely. By extension, the possibility of your share of this asset being diluted is equally unlikely. Lastly, investment into the gold mining space has been quite scant over the last 10 years. A combination of poor budget management and failed projects has been the major Achilles heel for this industry. Furthermore, mining companies usually receive a boost financially once a firm upward swing in the price of gold has been established. Although the physical metal has seen the beginnings of a run since the beginning of 2024, this has largely been due to the mass accumulation of gold by world central banks. And central banks buy gold, not gold mining investments. The inability to boost gold's production has implications for you as an investor. The limited supply of gold, coupled with its growing demand, underpins its value. Just a quick interruption to this week's episode to give a quick mention to one of this channel's sponsors, Augusta Precious Metals. With over a decade in the industry, Augusta Precious Metals is one of the leading gold investing companies for trust, customer empowerment, and prices. The company provides 401k rollover services to tax-advantaged gold IRAs, as well as a unique gold investing educational webinar and resources for their customers, helping beginning and experienced investors protect their retirement wealth with confidence. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. To find out more about Augusta Precious Metals, see the link in the video description to visit Augusta Precious Metals' official site to receive a free gold investing guide. Also, check out our video review of Augusta Precious Metals by clicking the link in the top right. Now, back to the episode. De-Dollarization and rising political tensions. There has been much talk and no shortage of hype and theories about this particular subject, de-dollarization, with regards to its timing and velocity. Regardless of the differing opinions of many of the macroeconomic experts in terms of its forecasting and time horizon, the process has begun and it is accelerating. The BRICS nations, Brazil, Russia, India, China, and South Africa, as members, have already been trading commodities such as oil in their own currencies, not the dollar. The introduction of the membership of Saudi Arabia further threatens the US dollar's global reserve status and its dominance as the petrodollar. Furthermore, the original BRICS coalition alone share a global GDP that is now overtaking the previously dominated Western G7 nations. With the 2024 entry of the additional 6 nations, Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates, this will increasingly lead to a more bifurcated global economy and trading system, further isolating the dollar as a central bank reserve. As stated in the previous videos, building on the trend of de-dollarization, central banks around the globe are stepping up their gold holdings. This shift is largely a response to the diminishing purchasing power of their dollar reserves and what can be termed as a response to the weaponization of the US dollar. Irrespective of one's feelings and views of Russia's invasion of Ukraine in the spring of 2022, the resulting economic sanctions, seizure of foreign assets, freezing of Russia's currency reserves, and the punitive restrictions placed on Russia with the use of the SWIFT banking system created an atmosphere of uncertainty among Eastern Bloc nations. Moreover, this collective action by the G7 nations, more specifically the United States, has caused many foreign governments to further contemplate their participation in the dollar system, and has created an impetus for these non-G7 nations to further distance themselves from the dollar reserve system. As with the case of the Russian invasion and resulting sanctions, the prospect of being considered and dealt with as a pariah state in the eyes of the Western nations has the potential to transform any country's dollar reserves from a highly liquid asset to essentially useless pieces of paper. Hence, we see the continued accumulation of gold and the reduction of dollars and dollar derivatives of these foreign central banks. Gold is a time-tested and universal form of money that every country trusts. It cannot be inflated or be confiscated if held domestically within the country's central bank. This provides security. Therefore, the mass purchases of gold are likely to continue further pushing up the price of gold. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, best prices, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring that all these investment principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the links in the video description to access the free gold investment guides from these companies. If you have $100K of retirement savings to protect and want to take advantage of the best volume prices, see the link in the video description to sign up for the free gold and silver web conference hosted by Augusta Precious Metals. Thank you for watching.